Hi everyone, Mark Myman here coming to you with a February 2023 market update. We are still seeing a lot of buyers sitting on the fence waiting for lower interest rates, and we actually think that's a bad idea. Wanted to give you some talking points of things that you can discuss with your clients to help them overcome that issue. First of all, it is mathematically proven that price matters more than interest rate as far as your monthly payments concerned. So if you're able to get a property at a more reasonable price than you would otherwise when rates are lower, you're actually better off financing at a higher rate with a lower price. Secondly, if you look at peaks and valleys within the real estate market over time, each peak tends to be higher than the last one, which basically indicates that if you hold real estate long enough, it doesn't really matter if you bought at a peak or a valley given that particular period of time. Because unless you're planning on selling that real estate very quickly, you can wait for the next peak, which is almost always historically higher than the one before that. If you wait a couple of peaks, you'll benefit even more. Thirdly, ask anybody who bought 10 years ago. Do they regret buying? Do they even remember if they bought at a peak or a valley in prices? Because it doesn't really matter. If the property is worth more now over time, which always happens, it's historically proven, it really doesn't matter when you bought in that particular cycle. And lastly, buyers gave up a lot of priorities over the course of 2021, 2022 during that frenzy of buying. So they may have given up square footage, maybe they bought a home that wasn't in the location that they ideally wanted, or maybe they just had to settle for something that they generally weren't all that excited about. And now, because prices have moderated a little bit, we're starting to see that our clients aren't having to give up those things that were a priority for them. So those are some talking points. Also wanted to explore interest rates with you a little bit. So we talk a lot about inflation, what's going on with inflation, and why does that matter? How is that even tied to interest rates? So I want to show you a little chart here that basically maps over the course of the last several years how inflation has moved relative to 30-year mortgage rates. And as you can see, rates tend to follow the same pattern. So if inflation is flat, rates are generally flat. When inflation starts to go up, which it did in probably the second half of 2021, normally we see interest rates start to go up as well. Now, at that time, we were still having the government step in and buying bonds to try to keep interest rates low. So you see this little period of time where inflation was rising, but mortgage rates were not. That's why the government was basically keeping the training wheels on, so to speak. And then once the QE period, quantitative easing, or the bond purchasing stopped, the interest rates started to follow the pattern of inflation and go up. What that also means is that as inflation goes down, interest rates will go down. Interest rates and inflation are very closely tied together as far as the direction that they're going, as long as the government isn't stepping in to try to do something unusual. So we will likely see interest rates continue to drop over the course of the next 12 months, maybe 18 to 24 months. But we're generally going to continue to see that trend that we've already started to see materialize. Some other things that I wanted to highlight. First of all, a new product that we just launched. It's amazing. It's basically a program that does not require employment or income to be stated. So all these issues we commonly see with buyers that have an issue where maybe they recently went self-employed, or they're in between jobs, or maybe they just changed jobs and a lender won't let them use their bonus compensation or RSU income to qualify. So this product is a great interim solution to help those clients be able to purchase, whereas normally they might not be able to qualify. And then the idea is that even though these rates are a bit higher, they will be able to refinance out of that once that situation resolves itself. So it's a really, really great product. And we're helping a lot of clients with unique circumstances, which seem to be a lot of people these days, be able to get into the homes that they want to buy without having to wait for those situations to resolve. So where are the current opportunities in the market? In my opinion, it continues to be for investors. I think cash flow right now with rents being high and prices moderating a little bit is an opportunity for an investor to get a good cash flowing property. And if interest rates do drop as they are expected and people refinance, investors' cash flow is going to get even better. So we're starting to get a lot of calls from investors these days, and there's a lot of opportunity out there. I'm looking to invest myself, so I'm putting my money where my mouth is on this and really believe that this is a great window of opportunity that's probably going to be very short-lived. Because as interest rates come down, the market's going to get flooded with buyers all over again. Prices are likely to go back up as you have more and more bidding wars. Also, right now, because prices have moderated, it's actually a better time to upgrade your home when prices are more moderate than when they're at a peak. So most people say, well, I don't want to sell now because it's not an ideal time to sell. Let's take an example where you have a buyer moving from $1 million home into a $2 million home. And let's just say, for argument's sake, prices were down by 10% off of a peak. When you look at the cost to upgrade, right, that 10% reduction you get off theoretically of that purchase price of $2 million is $200,000. What does it cost you when you sell? 10% of $1 million, which is $100,000. So it's actually better to upgrade in a market like we're in now than it is to wait until you can sell your home for top dollar, assuming you're selling and buying in the same general market time frame. So we really think that the time to upgrade is now. So how can we collectively work together? So we're doing a lot of office and team meeting visits where we'll come in and talk about interest rates, some of these topics that I'm covering today, bridge loans, lots of excitement around buy down options for lower interest rates to try to entice buyers to get off the fence. So if there's any interest in having us come to a team meeting or an office meeting, please don't hesitate to reach out. We really enjoy doing that stuff and bringing awareness to this. We're also recording a lot of Zoom sessions with agents and financial advisors about topics that are important to their clients. So if there is a topic that's of relevance to you, we would love to get on a Zoom, record it, and be able to post it on your social media, our social media, and bring awareness to that topic and try to create more of a following for both of us. We also, as you may have heard about, have launched our Financial Wellness Forum, which is a online series of sessions where we'll talk about either personal finance or real estate matters to try to just help people sharpen their financial pencils and be in a position to improve their finances in general. There's no cost associated with this. It's free. Everyone is welcome. So if it's of interest to you, you can check out our email that will be attached to this video and get the information on how to register for that. We've had some great sessions, most recently about cost segregation, which is a tax tactic that can be used for investors. We're talking about life insurance and how to choose a financial advisor and some really, really great topics that we're getting a lot of good traction with. We've also just launched a team website, which I'm very excited about. It's mmteam.njlenders.com. So go check it out. You'll learn more about us and my team, what we're up to philanthropically, and also different opportunities to learn from some of the videos that we've posted on YouTube and beyond. And we're also very excited to very soon be launching my own podcast, which we're going to call On the Mark. And we're going to be very excited to bring some of these same financial topics to our community. We've also added some more states to our list of licensed approved states. So we're now licensed in 20 with 2 more. And so even if you have clients who are out of state or family members or anybody that you know that might need help with a loan and you want to give them a name of someone that you trust, we would be more than happy to welcome them. So some key dates to watch out for to wrap up here. First of all, we have February 14th is the all-important inflation reading, the CPI index. That has recently been a date that we've kept very close eye on so that clients can wait for that date and that announcement to come out before locking in a rate, because we have seen rates dip a little bit after each of those readings. March 8th is our next session of the Financial Wellness Forum. I'll be interviewing a gentleman named Dan Greifenberg, who is going to talk about life insurance, just a very general overview, very easy to understand for people who are interested in learning more about that. Again, if you register on our website for the forum in general, you'll get all the information to be able to view that. And even if you can't attend live, we do post all of the sessions to our Financial Wellness Forum website, which you will get access to once you register. And lastly, the next Fed meeting, which is pretty highly anticipated as we're starting to get through this transition of inflation potentially coming down, but also some other potential rocks up ahead with our economy. So that's going to be March 21st and 22nd. So we're going to be keeping an eye on that. So if any of these topics are of interest, please don't hesitate to reach out. We would love to talk to you. Come to a team meeting, an office meeting, and talk about things that are important to you. So please reach out, and we'll see you again next month.